And today we have just a NASA update, which we want to take you through. Basically, we just want to remind each other there hasn't been much movement per se in terms of NASA, no new legislation that has come through, but it is important for us just to remind each other as we are going through. Last week, we had an update on ZIMRA, where we were talking about the ITF1, which has been called up by the commissioner, and that is the movement that has taken place on that authority. Now, with this authority, NASA, we just want to have a look and maybe share a few tips that are important as you are processing your NASA and uploading onto their portal. Now, as we start, I basically want to first of all look at this NASA schemes that we have. And the first one that I want us to look at, just to give each other some context, in case we didn't know about this, but it's important just for us to remind each other. With NASA has got basically two schemes that it runs. In fact, NASA was legislated in 1992, 93, and it came into existence in 1994 through that Act of Parliament, which becomes the NASA Act. And it manages two schemes. The first one is the POBS scheme, which stands for Pensions and Benefit and Other Benefits Scheme. And under this scheme, if you remember, this is the one that we call NASA and the one that we deduct as NASA on our payslips. And employees contribute 4.5%, and the employer also contributes 4.5% in total, meaning the total is 9%. And there is a maximum ceiling of $700 or the ZIG equivalent using the interbank rate. And so the ceiling is there. Basically, we're simply saying we deduct 4.5% from an employee, and an employer also contributes 4.5%, giving us a total of 9%. If the employee's basic is below $700, it means the whole basic is pensionable. In other words, we use the whole basic salary to calculate the contribution. But if the employee's salary is above 700, we remain at, we calculate 4.5% of 700, where you'll then see anyone who's earning above $700, they will have a fixed amount of NASA being deducted of $31.50, and the employer also contributing $31.50, giving us a total of $63 being deducted for anyone earning above 700. Regardless of whatever else they earn beyond that, the amount remains the same because it's a calculation on the ceiling. Now, under this scheme, we also have those that are exempt. In other words, those that do not contribute towards the scheme. You've got your casual employees, and by casual employees, those are those that work for less than 18 days in the month. And then we also have students on attachment as well as non-executive directors. So if you have any of these employees on your payrolls, you do not need to deduct NASA from them. Now, just coming back to the casual employees or those that work less than 18 days, this also refers to employees who join during the month. If they work for less than 18 days, that particular month, you don't need to deduct NASA. We do it as a standard just to ensure that we now have them also registered. We're going to be talking about that just now. But in essence, anyone who works less than 18 days in a month, they must not have any NASA deductions according to their act. For students, I remember others also asking, why do we not deduct from students, yet they are actually working? In fact, I got a call this week, somebody saying we've assigned grades to students. We've also given them job titles. But still, if they are only going to be working for you for one year, and then they leave and go back to school, you do not need to deduct NASA deductions from them. The reason being, number one, they are not yet employees. Even if you assign job titles, even if you give them grades, they are not employees because they are going to go back to school. And once they go back to school, there is no guarantee that they are going to come back and work for you or for any other company in Zimbabwe. Some may even leave the country. So you find that it's better to deduct from employees who we know are on an employment contract. And for your non-executive directors, basically they are awarded a director's fees or a board fees, and board fees are not pensionable earnings. So we do not deduct NASA from a board fee. Okay, so this is the first scheme. And with this scheme, there is the statutory instrument 169 of 2021, just to remind each other on this one. And this one is the one that introduced the concept of dualizing the NASA contributions if employees are earning both US and ZWG. And by dualizing, basically we're saying now there was a law which then allowed employers to deduct in both currencies. That's why you now find even up to today, if you are earning both US and ZIG earnings, you'll find that you'll have your NASA contributions. A bit of it will be in ZIG, and a bit of it will be in US dollars, which will be divided proportionally according to how much you're earning in each currency, and then that is deducted from you. So there will be remittances to NASA for US and remittances for ZIG, and this was brought about by Statutory Instrument 169 of 2021. It also brought through the concept of grossing up. This is not the grossing up which we normally refer to in tax, but the grossing up that they are referring to here is if your basic salary is less than the allowances awarded to an employee. Those allowances will also be included in the calculation of the contributions, especially if they are more than the basic, and the basic is below the ceiling of USD $700. So you'll find that you then have to gross up the basic by adding those allowances so that it reaches the ceiling, or then we calculate the contributions based on that. So you find that nowadays when inspectors come through, the inspectors are now going to want to see your payroll summaries, which is your cost by code grand total. That's the usual one that they look at. And they may also want to look at the NASA P4. But on the cost by code grand total, which is the payroll summary, they want to check on the allowances. They look at the total basic salaries, and then they look at the allowances. And if the allowances are more than the basic salaries awarded to employees, they may then want to gross up, and they may say you have under deducted NASA, you haven't declared the correct earnings for the employees. This was brought about because of employers who were actually giving employees a very small basic and then awarding them huge allowances in a bid to run away from employer contributions towards NASA, pension, and even retrenchment packages. So you'll find that with that, NASA then came in with Statutory Instrument 169, where now these allowances must be added together with the basic salary. So you then need to be very careful in your remuneration packages, the structures that you have. I would recommend that you always give an employees a normal basic salary, which will then be more than the allowances your employees get. All right, so that's on the first scheme. The second scheme is the APWCS scheme, which is the Accident Prevention and Worker Compensation Scheme. This used to be called WCIF, which was Workers' Compensation Insurance Fund, but it was rebranded to APWCS, which is now your Accident Prevention and Worker Compensation Scheme. Now, this is an insurance against the risk of injury in the workplace. So basically, if your employees are working, they must be insured, and the premiums are wholly paid by an employer to NASA to mitigate the costs that may arise when employees are injured at work. So you find that the beneficiaries of this scheme are employees, where they will actually then also receive treatment, but at the same time, the employer is also a beneficiary where the costs will be mitigated. You can claim back what you then used or the costs that you incurred treating the employee, taking them to hospital, and any medical bills that could have arisen from that. Now, these premiums vary from industry to industry, depending with the risk of injury. So it's very important to realize that it's not a flat figure like your POBs, where you have 4.5% being deducted from employees and employers, regardless of which company, regardless of which industry. With your Accident Prevention and Worker Compensation Scheme, the amounts vary from industry to industry because the risk of injury varies from industry to industry. The higher the risk of injury, the higher the premium the employer needs to pay. So these are amounts that an employer pays, and employees do not contribute towards this insurance fund. That's why you find on your payslip, you have the option of displaying what the employer is contributing for each employee to see, or you can actually ask payday not to show those amounts, and they will not be, they'll be hidden from employees. However, health and safety standards must be observed to reduce the risk of injury. So that's very important. NASA, when they come in to do inspections, they also expect employers to adhere to health and safety standards in that particular industry. So it's very, very important. Also, if we are to claim, if an injury occurs and there are costs to it, one of the things they may also check is to see if you are adhering to all safety standards that are published by NSSA. So in an organization, depending with the size, it's important to have what we call a SHE officer who looks at your health and safety issues. If you do not, you can also maybe outsource and just ensure that you have the correct safety standards being observed at the workplace. Now, for this one, you also have Statutory Instrument 99 of 2024, which looks at the APWCS contribution calculations, which were also revised. Now, with this one of 2024, it now also dualizes the contributions for WCIF. If an employee's basic is lower than the allowances will also be grossed up and included in the calculation of APWCS. So again, the grossing up concept has been brought up by this Statutory Instrument 99 of 2024, and I believe a lot of people are not aware of this. So you'll find that when NSSA inspectors also come, they also want to see the basic salaries and the allowances, and they now want those to be included when you're calculating WCIF as well. Now, on payday is readily set up to be able to accommodate this requirement, because for each and every code, you can tell it whether you want payday to include it for WCIF contributions or you want to include it for NSSA contributions. I may show you that screen later on, but it's important for us to realize that, again, that grossing up aspect has been brought in as well. And also, it also empowers them to also ask for WCIF contributions in both currencies. In the past, we were looking at one currency and paying it out in one currency, the WCIF. Statutory Instrument 99 of 2024 also brings this in as well. All right, now let's come to some of the tips on the self-service portal. I'm sure all of us are aware that NSSA brought in the self-service portal. I think it was launched in 2022, and it has been going, and people are now able to access their records online. Now, as payroll administrators, these are some of the tips that I want to give you so that you are also able to use these. I have borrowed these tips from our bureau department, where there's Luigi Alamu, because of his experience there as well, uploading for some of our bureau clients. There are some tips that I would also like to share with you as well. The first one, payroll administrators must register new employees on the portal promptly within 30 days, as delays may require you to seek approval from NSSA to register the employees. So basically what we're simply saying, a good payroll procedure is when you engage an employee, ensure that you also put them onto the NSSA portal and you also put them there. Do not wait, because the delay, I think the maximum number of months is 3 months though. But if you delay and you now want to register them after they've been with you for 2-3 months, then the portal will reject that registry, and it will need you to then get in touch with NSSA. They are the ones who look at, they'll do some verification processes, look at some of the things on the employee, check on their background and so forth, and then they will admit them onto the portal. So to avoid this, ensure that all new employees, you register them on the portal. If you register them on payday, you should also register them on the portal. If they don't have a NSSA number, one will be generated for them, and that is the NSSA number that you should put onto payday in the master file. So that, again, when the payroll is now populating the upload file, it will also pick up the NSSA numbers for the employees. So that is very important. Register your employees promptly. Number 2, employees' names must be correct and the same as on the national ID card, as this is linked to the national registry. Now, you find with this one, it may sound very obvious, but you're going to realize that certain things happen. When employees get married, especially when women get married, they may change their maiden names and take on the husband's name. And they actually may go to registry and they may want that to be done. If registry hasn't updated their file, you'll find that they'll still have the old name there. And they may come to you claiming that they're Mrs. So-and-so, but that name is not yet recognized on the national registry. So it's important to make sure that if they are to come in with their married name, with their spouse's surname, it must appear on the national ID card. That is one guarantee that the national registry has also updated their own records. If they give you a national ID card, but they're telling you they're Mrs. So-and-so and it's not reflected on the ID, make sure that on the portal you register them with what is appearing on the national ID card, so that it is exactly the same as what is found in central registry. That is very, very important. Number 3, terminations must be done promptly to avoid further billing by NSSA. So this is important. You should indicate that these employees have left your organization and ensure that they are also terminated and they will not continue being billed under your company. And then also, it's important to reconcile contributions on the upload file to the P4 generated by payday. And you can use the auto sum in Excel to check if they are balancing. So what you're simply saying is, when you want to upload your file, when you generate your NSSA file, yes, it's being generated by payday. It's always good to double check the file itself. It's an Excel file, if you remember. And on that file, it has got many columns. It has got a column for your actual earnings. It has got a column for insurable earnings. It is important just to do some double checking. Make sure that the totals that are on these columns balance to the totals that are also coming up on your P2. What it means is, before you upload your NSSA file, before you upload the NSSA file, ensure that you've also printed the P4 and you keep a hard copy of that P4. So you need to then reconcile the figures, the total basic salaries that are appearing, the total contributions that are appearing on the P4 hard copy. They must be the same as what is on the upload file. If they are different, it probably means that there are some employees who are not included in either the upload file or on the P4. And so it is important to reconcile that first and then upload when you are happy with that. All right. Again, it is important to check on the number of employees uploaded if they are the same as those in payday. I think it's very important. This is one area which can bring about differences. Maybe employees have been put into company B as an example, and when you're creating the file, the P4, you used company A. So you find they will be skipped, they will not be there. So just ensure that everyone is included both on the P4 and on the upload file. Again, another tip that we want to give to you is that you must save your upload files and archive them where they can be easily accessed, and save hard copies of the P4 returns as they are used by NSSA inspectors. So in fact, we got this from one of our user groups. When we invited NSSA to come, I remember, I think it is Mr. Changira from NSSA who came in and said it is important to keep hard copies, because these are the hard copies that will be used for inspections by your NSSA inspectors. So if you find that your hard copies balanced your upload files, even when an inspection is done, everything will be on point and there will be no issues that will arise. Now, again, it is important just for you to know that employees can also access the portal, and they are also able to update their own details, especially on beneficiaries. And this is critical, because you find that an employee can actually access the portal and they can use they can go in as a member and not as an employer. So they can log in as a member, and when they log in as members, they actually use their ID numbers, and they will also use their NSSA numbers as well. So you find they can log in and they should be able to see their details, and they should be able to change those. And whilst we are there, it is important that when you're uploading, or in fact, when you're registering new employees, make sure that their email address is correct, and also make sure that their contact details, contact numbers are also correct. Because when they also then log in as members, they can also check on these details. Now, on the beneficiary side, it is very, very important because remember, NASA is not a tax. I know a lot of people think that the deduction on NASA from NASA is a tax and therefore it's going to government and nothing is coming out. No, NASA is a pension scheme. And what that means is there are benefits that an employee can enjoy when they retire. Now, for them to be able to enjoy these benefits, they can enjoy them themselves, but they can also include other beneficiaries to get those benefits as well. So it is important for an employee to go in and ensure that the correct beneficiaries are also registered on the portal, and they can do this themselves. Because life happens and people can change life circumstances and situations. For instance, they can marry and then they can divorce and then get married again. They need to update their NASA details, their beneficiary details, because they may have their ex being still on the portal or being on their database. They must change that. Or they have a newly born baby that has come in, or they have a new beneficiary they want to put on. And they may want to do this privately without really going to HR or to the payroll office. And the concept of having the NASA portal is such that they can also log in as members and they should be able to change those details themselves. Now, as I come to a conclusion, as I finish off, just to remind each other that there's the July deadline for the verification of NASA details, which is coming up. I think we're left with April and May that is coming through. So just ensure that all their details are up to date on the portal so that nothing will be deleted or made obsolete. So they need to just check. So please make sure you make them aware that that deadline is coming through and they should be able to go and have a look. And also with that effect, NASA also has service kiosks where employees can walk in and they can be assisted privately. So that is also available to employees. They can actually go in and they can also get assistance there. So these are the tips that I wanted to discuss with you. I know it is most probably, maybe some of you already know some of these things, but I thought it was important just for us to remind each other of this. Now, maybe as I stop my sharing, I just want to then, before I open it up for discussion, I would like to then open up our payroll. I want to share just a few things on NASA from payday so that we are also able to ensure that all things are okay and correct in the payroll. So I'm just logging into our payroll. And I'm going to share my screen on payroll. And we are going to look at one or two tips that I would like us to then have a look at there. Now, let me just quickly go in. Let me share my screen on payday. And I'm sure all of us can now see my screen in payday. Now, in payday, what is very important, a couple of things when it comes to NASA. Let me start with the master file first. Now, in payday, it is important for us to ensure that, first of all, our employees have the correct email addresses, as I was talking about there, as well as the correct cell phone numbers that you should also have for your employees. So ensure that your employee has got those details. And also on the NASA scheme, this is where you should also have the correct NASA numbers for the employees. And the date joined for NASA is the date they were put onto the NASA scheme when they joined your company. So if it is in the month that they were engaged, you can put in the same start date as the contract date that they started, and you can also put it there. So it is important to ensure that we also have the NASA number being there. If you don't have the NASA number, register the employee as a new employee on the portal, and the NASA number will be generated, and then you need to put it through on payroll. That's number one. Number two, when you're now processing your payroll, for your employees. You need to make sure that when you're running your draft, you have, if you are running a dual currency payroll, ensure that you have the correct ceiling in ZWG for your employees in the local currency. So what you need to do is you take your $700 peg in USD and you multiply it by the equivalent, by the interbank rate of the day, and the amount you get in ZIG is what you then put in there for the employee as well as for the employer contributions or the company contributions. Now, if your payroll is 100% USD, all you need to do is to come and put the ceiling of 700 on your employee and on the company contributions there. And once you do that, everything should be square. So it's only for ZIG payrolls as well as dual payrolls where you need to put in the insurable ceiling in ZIGs. And you convert the 700 using the interbank rate. That is on the calculation side. Once you do that, the payroll is also going to then calculate the NSSA contributions and split them according to the proportions between the ZIG and US that you have awarded your employees. Now, on the business of including items for NSSA, remember we talked of statutory instrument 169, where if an employee's basic is less than the allowances awarded to that employee, the allowances must be grossed up, in other words, must be added to the basic salary, and then for the purposes of calculating NSSA. So how can you include other allowances to be calculated for your POBs deduction, your NSSA deduction? So what you need to do is to come to your main menu, then you go to your code, then you go to your earning descriptions. And here I'll start off by looking at the first common code, which is our basic salary. Now, when you look at your basic salary, this is where this code is set up. This is a very important screen because it then guides payday as to how it should be treated for tax as well as for these other deductions. And if you come here where it says include in calculation, do you see you can have where it says NSSA, yes or no? So if you put a tick on NSSA there, it means when it's calculating NSSA, it will look at the basic pay. When you're calculating WCIF, which is your AP WCS, you also put a tick like that. That means your basic salary is going to be used for the calculation of your NSSA as well as for WCIF. Now, if your basic salary is less than 700 and the employee or your employees have allowances that are more than the basic, and according to statutory instrument 169, you're supposed to add those earnings. What you now need to do is to go to each particular earning you want to add to the basic for the calculation of NSSA. For instance, I'll take housing allowance. I know this traditionally was not. In fact, maybe let me take cost of living allowance, because basically this is the one that a lot of people use, and they give employees a huge cost of living allowance and they have a tiny basic salary. Now, if you want to include the cost of living allowance in the calculation of your POBs, you then go to this code and then you come to where it says NSSA yes or no, and then you put a tick. It's going to be included for your POBs calculations. If the employee, again, in the same scenario, according to statutory instrument 99 of 2024, for your APWCS, you also then gross it up by putting a tick where it says include for WCIF. So what then the payroll will do, payday is going to add your basic plus the cost of living allowance, adds them together, then calculates your NSSA and calculates your WCIF or your APWCS. So this is where you can then go through the number of, if it is one code, if it is more than one, maybe if 2 or 3, you can go to each of those codes and then you put a tick where it says NSSA yes or no, and you can put a tick where it says WCIF yes or no, and you put a tick there, and they will also be included in the calculation. All right, and then lastly, on the generation of the upload file and the NASA return. Let me start with the upload file. I think the NASA return is easy. It is your NASA return. Basically, you can find the NASA return. Okay, let me start with the NASA return itself. If I come to my reports, I come to my statutory reports, and I can select my NASA P4, and then I can preview that report, and then I can see what the NASA contributions would be. So this is where I create my NASA P4. I know it has got zeros there because I'm in my draft mode. I haven't run a calculation, but this is where you get your return. So you come to statutory reports, under your reports, and then you select the NASA P4. This is the one that we are saying you should print as a hard copy, and then you keep physically in a file for inspection. All right. So this is the first one. The second one is the NASA upload file. And this is found under your EFTS. And under EFTS, you can come down to where it says NASA P4 extract. Now, when you select this one, it will give you a screen which will then ask you how you want it to be generated. First of all, it will start with the company. If you have more than one company, you can select the company that you want to print for. And then it will show you the sector in which they belong. And most importantly, you need to come to where it says currency. Now, in the past, you could have it, you could generate it in one currency, even if it was a dual payroll. You could generate everything in one currency and upload in one currency. But nowadays, they no longer want us to do that. They want you to upload USD separately from your ZIG as well. So we no longer use the option all, but we use either ZIG or USD. So when you're generating, make sure you select the correct currency. That means when you're creating your upload files, you are creating two upload files if your payroll is a hybrid payroll. You're creating one for your ZIG and you're creating one for your USD. And they will need to be uploaded separately. Okay. So please ensure when you're generating your upload files, you select the correct currency. Please no longer use or. We are no longer using that at all. So please make sure you select the correct currency. All right. That is on the generation of the files themselves in Payday. Okay. I think these are the areas which I wanted to share with you. I'm now going to stop my screen share, and then I'm going to open up the floor if there are any questions. But let me put a disclaimer here. First of all, as Touchstone, we did not create the NASA portal. So if you find that there are technical issues with your portal, you may need to get in touch with NASA directly. You can even see from my presentations, I cannot present using the NASA portal because we were not given, or in fact, it is not there, a dummy portal for training purposes. We don't have that. And we cannot then use one of our clients as a demonstrating platform. We cannot do that. So you need then to get in touch with them. If you need contact details for NASA, you can always get in touch with us at Touchstone, and then we'll be able to forward some good people from NASA who will be able to help and assist. But if there are any questions, maybe any clarity that you may require, please go ahead. You can unmute yourself and ask your question. I give you this opportunity.
Hi, good morning, Nick. It's Mr. Perry here.
Hi, Mr. Perry.
I'm good, Nick. My first question is, I've got a lot of questions, Nick.
Oh, okay. I hope I'll be able to help.
Yes.
If not, I can direct you to NASA.
Oh, that's fine. Thank you. My first question is, I heard you've said there is a NASA July verification, something like that. I'm unaware of that circular. I'm not sure what is it that is due on the July 2026.
Okay, on the July 2026, basically all they want is for people to verify their information. In other words, to confirm that before prior months, prior years, when they were on NASA, they just want you to ensure that all your details are correct and are captured on the database. So an employee needs to check if they are existent on the database. If not, then they need to make it aware that they are not there. Then they need to go and prove that they were working for these companies or they're working for your company, and their details are not there. So it's just a check process where we are supposed to check to ensure that all details pertaining to employees are there. If they do not do this verification, it means that whatever is on the database, if it is not confirmed, it is going to be removed from the NASA database. And so sometimes you do not want that data to be lost. So it's important just to go and confirm. So I think NASA came in even for our January user group session, and they discussed this with us, and I think they shared with us as well at length about it. So just make sure, I will make your employees aware that they just need to maybe check, maybe go onto the portal, check if their information is correct. If there are any issues, then they must raise them with NASA. And I think that is important, an important exercise that needs to be done. We are also going to be having our breakfast meeting in July, coincidentally, early July. So we are going to invite NASA again to come and also discuss with us those issues. But for now, maybe just ask your employees to check their data.
Okay, thank you, Nix. My second question is on, let's say you have two separate payrolls. The other payroll, maybe let's say it's HQ South, and the other payroll it's CF, and they are being administered in different machines. How do I upload the NASA upload thing? Do I upload them separately as well, or maybe I'll have to consolidate them?
Okay. Now, on the NASA portal, these two companies, are they registered separately, or they are registered as they are all under one company?
No, they are all under one company.
So what you can then do is you generate them separately because they are on separate machines, but then you copy and paste one of them onto the other so that when you are uploading onto the portal, they are all there.
Okay, so it means I have to do I have to consolidate the report,
Yes.
the
That is the
Excel
term that you used,
schedule.
correct. Yes, you need to consolidate
Yes.
them and then you upload just one file. Because if you do not, again, I'm sure the portal will also raise the issue to say you're trying to upload and it's not everybody who's coming onto that portal. So it's important for you to then make sure that when you do the upload, just upload all of them all at once, and then just copy and paste them onto the Excel. That's the good thing, it's Excel. So you can copy and paste and then upload just one file.
Okay. Thank you so much, Nick. I'm really answered.
Okay, that's fine. Great. Thank you, Mr. Piri. Thanks for your contributions there. Are there any other contributions, any other questions that
Yes,
people may have?
yes, Nick. One question from two questions from me.
Okay, marvelous. How are you doing?
I'm okay. How are you?
I'm very well, thanks, my brother.
Sure. Thank you so much. The first one is when we said the insurable earning 700, and then we've got employees who are getting less than that amount, around 300, 400, and then they've got a housing allowance and transport allowance. So you're saying we need to add those two allowances to that 400 to make it 7.
Okay, before you add the two, you need to compare. Is your transport and housing, when you combine them, are they more than the basic salary? If not, then that principle does not apply. You simply
so
use
that's
your 400. But if
okay.
your housing and transport, let's say if you add them together, they give you $1,000 and your basic is only $400. That means you're now supposed to add them together to 1,400, and then obviously apply the 700 limit and then calculate $31.50 as a deduction from the employees.
Okay, I don't think so much. I think we are safe because the basic will be around 400 and then transport and housing, that's 230 added together.
So you are safe. There is no need to worry on that regard.
Yeah, no, thank you so much. And then
in fact, maybe if I can add on to this, traditionally your transport and housing were never supposed to be pensionable items. The spirit of the act of the statutory instrument 169 was to go after the cost of living or the hardship allowance that was being given to employees, and that would be more than the basic salary. I think that is really what they were aiming at. But your transport and housing, I don't think really, from a personal point of view, I don't even think they should qualify as being part of or being grossed up to be part of your insurable earnings.
No, thanks so much. And then the other one is just confirmation. Does the calculation of WCIF include the allowances, or is just the basic pay?
Okay, that's a very good question. It allows me to recap on what I was presenting. Before Statutory Instrument 99 of 2024, before that SI came out, we were only supposed to calculate your WCIF based on the basic salary only, regardless of whatever other allowances the employees were getting, whether they were more or less than the basic. We were only supposed to use the basic salary in the calculation of WCIF. But with the SI that is coming of SI 99 of 2024, it is also bringing in the same concept that was on your NASA deduction to say also include them if they are more than the basic. So now they are being included in the calculation of the premium to be paid to WCIF.
Okay, only if it's more than the basic.
Only if it's more than, yes.
Yeah, no, that's fine.
Okay.
No, thank you so much for the clarification.
You're most welcome, Marvelous. Thank you for joining us. And I hope everything is well at Hillcrest out there in Mutare.
It is indeed. Expecting you one day.
I will come.
Okay, thanks.
All right then. Are there any other questions from the floor?
Oh, yes, Mr. Nick. I'm back again.
All right.
I wanted to ask my WCIF, it seems to be more than the other pension contribution. Is it normal? The WCIF is quite much higher than the pension contribution itself.
Okay. You see, with WCIF, the principle is that it must be calculated based on the insurable earning of an employee. Now, the insurable earning is the total basic salaries of your employees. And so when you're now calculating your total basic salary, there is no cap for WCIF. It means that the whole basic, whether an employee is earning $100, they're earning $5,000, that whole basic salary is included in the calculation of WCIF. So you may then find that the contributions for WCIF may be higher, number one. Number two, I am not sure how much your pension contributions are in terms of the pension percentage that you're also using. Because if your pension percentage is lower than the WCIF percentage contribution, that can also have that effect of reducing, of making the WCIF more than your pension. So those are the two aspects that I would think may justify why WCIF may be more than your pension contribution.
Okay. Okay. Then my last one, Nick. I wanted to find out if Payday can provide us with relevant information on pension and other benefits scheme on NASA claim form, where I can get the information of the insurable earning and contribution for the last 12 months of employment any employee has during that time, where I can get those records quite easily.
Okay. All right. In
Yes,
payday,
on claim forms. Yes.
yes, I understand that you want to work with your claim forms. If you want
Yes.
information from payday for your claim forms, there are quite a number of areas where you can actually get this. This is why I love payday, because payday, there are quite a number of ways one can access information from payday. I think I'm sharing my screen there with you. Basically, the first port of call that I would use, I would go to my historical reports. And under my historical reports, I can actually get quite a number of reports. One of the very easiest ones is you can use your historical cost by code. And for historical cost by code, I can then select from which date. Let's say we want to do it from the 1st of January 2025 to December. So I can say maybe to 31 December 2025. And the code that I so wish, I want code 500. So I want it to start from code 500 to code 500. And I can also even ask it to put it in dual, or I can actually have it being one. Let me see if I can quickly extract that. I hope it will not take much time. All right. So as you can see, just by doing that extract, it will then show me for January how much I contributed in US and how much I contributed in ZIG. You can see the amounts there, the employee contributions, the company contributions. And this is for my first employee job log. And you can see for all the months right up to December, you can see how much the employee was contributing. So you can actually then select your employee and you can see how much the employee contributed during that particular time. So you'll be able to fill out your NASA P4, so your P9/10, which is the NASA claim form, using the figures coming from this historical report. So this is one of the areas. There are quite a number. You can even extract it to Excel if you so wish by using your extract to Excel. If I go to utilities and if I come down to where it says export to Excel, and here I can select my employees and select everything that I so wish. And then I can come to ED transactions as an example. I can pick up the code, which is for NASA. I know I haven't run my draft, but I'll just demonstrate with any code. And then what's most important, I can come to here where it says include historical figures. And then you can put in a range as well. And then it will pick up the total figures for that particular range that you'd have picked up. So this is another way of skinning the cat. You are also able to get these extracts. So it's quite easy and simple to get that information from Payday, Mr. Piri.
Okay, thank you so much, Nick.
Yeah.
Thank you very much. It was quite helpful. I've understood now.
All right, excellent. That's fine. Thank you, Mr. Piri.
Come.
Okay, I think from our chat, I also have one coming through from Tracy. She says, good morning, Nick. So if we register employees as single on the NASA portal, are they affected when it comes to the issues of beneficiaries you spoke about? The answer to that is yes. If they are single and there are no beneficiaries that are there, and when the time to claim these benefits come, the beneficiaries may not be able to access those benefits because they are not registered on the employees database. So it is very important that employees also put through their beneficiaries on the NASA portal, which is why they are also granted access onto the NASA portal, that they are able to put in their own beneficiaries at their own time so that they also benefit from the benefits that come from NASA. So make sure you encourage them. If you know that their literacy levels are low and they maybe not be able to be computer savvy, maybe you can do that for them. You can help them and assist them to upload that information onto the NASA portal. You can also help them to get that. But let's help them so that they can get their benefits from NASA. All right. Are there any other questions? All right. It seems like there are no more questions coming through.